Welcome back to Unday Radar Talks. Johnson & Johnson. Johnson & Johnson shares fell nearly 2% on Friday. The stock has fallen approximately 4.2% in the past 2 trading days. It is worth noting that the stock's trading volume has increased significantly in the last 2 trading days. The stock traded hands on Friday at 9.5 million shares, with a turnover rate of 0.4%, compared with 8 million shares, with a turnover rate of 0.33% in the previous session. The trading volume and turnover rate in these 2 days are both higher than the recent relative highs, which shows that the buying and selling in the past 2 days have been very active, and the current stock price has reached a key support position. Let's take a look at the stock's capital flows. We see that the stock's total net capital outflow in the last 2 trading days was $156 million. Compared with the net capital outflows in the previous few trading days, this amount is large, but it does not mean a bad thing. The stock's price on May 24th was already at a relatively low level, and the net outflow of $64 million was likely a reverse entry capital, which should be a positive signal. Let's take a look at analyst ratings for the stock. Based on 16 analyst stock ratings for Johnson & Johnson over the past 3 months, we see that buy ratings account for 56.25% and hold ratings account for 43.75%. The average stock price target for Johnson & Johnson stock is $175.21, with the highest estimate being $215 and the lowest estimate being $155. Wall Street's consensus rating on Johnson & Johnson stock is buy. So will Johnson & Johnson stock rebound next week? Or will it continue to fall? Although the stock has fallen significantly in the last 2 trading days, I have seen some positive data, including volume and capital flow data. The current price of the stock corresponds to the price position when the market opened on May 1st. That day was also a trading day with significantly increased trading volume. This position should be a strong support position, so technically, the stock should rise next week. Moderna Stock. Moderna shares rose 1.6% on Friday. The stock moved the stock price into a higher price range on May 22nd. The stock has surged more than 50% in the past month. The stock's trading volume in the last 3 trading days has been higher than usual, and the turnover rate is also higher than usual, so how much room does the stock price have to rise? I think it should be very small. Of course, this doesn't mean the stock price will fall sharply immediately. Although the stock has accumulated a lot of short-term profit-taking so far, and the current price has hit a short-term profit-taking sell-off position, it may not happen anytime soon. Let's take a look at the stock's capital flows. We see that the stock has experienced net capital inflows in the last 5 trading days. The total net capital inflow in the last 3 trading days was as high as $259 million. The data shows that buying is still very active, but since the stock price soared nearly 14% on May 22nd, the price has been at a high level, so we need to be cautious here. Let's take a look at analyst ratings for the stock. Based on 17 analysts' ratings of Moderna stock over the past 3 months, we see that buy ratings account for 41.18%, hold ratings account for 47.06%, and sell ratings account for 11.77%. The average price target for Moderna stock is $128.13, with a high estimate of $214 and a low estimate of $75. Wall Street's consensus rating on Moderna stock is buy. So what's next for Moderna stock? The stock's capital flow data shows that current buying is still very active and the stock price is still on an upward trend. I think the stock could rise further, but the upside is limited. The higher the stock price rises, the greater the selling pressure, and I believe $178.80 should be a key resistance level. CVS Health. CVS Health stock's 10 trading day gains were wiped out in 2 trading days, so things clearly don't look good. The stock fell more than 3% on Thursday, with a turnover rate of 1.46%, while Wednesday's turnover rate was 0.76%, indicating a large amount of stock selling. Although the stock price fell slightly on Friday, from a technical point of view, the the stock is currently in a downward trend. Let's take a look at the stock's capital flows. We have seen that the stock's net capital outflow in the last 2 trading days has been a bit large, which does not feel good. The total net capital inflow of the stock from May 15th to May 22nd was approximately $104 million, while the total net capital outflow in the last 2 trading days was approximately $120 million, and the stock price fell. Obviously, big capital is moving outflow from the stock. Let's take a look at analyst ratings for the stock. Based on 22 analyst stock ratings for CVS Health over the past 3 months, we see that buy ratings account for 54.55% and hold ratings account for 45.46%. The average price target for CVS Health stock is $71.52, with a high estimate of $94 and a low estimate of $58. Wall Street has a consensus rating of buy on CVS Health stock. Will CVS Health stock continue to fall? Some recent data on the stock have been negative. This may have been affected by the decline in the healthcare plan sector. The healthcare plan sector fell nearly 2% on Friday and is one of the worst performing sectors on the market. Negative sentiment is affecting individual stocks under the sector and will also affect the subsequent performance of CVS Health stock. Technically, I don't think the stock will bounce back immediately, but is more likely to continue falling. That's it. This is my analysis. If you have different ideas, please leave a message below. Thank you for watching. If you like my video, please give a thumbs up and click the subscribe button. See you in the next video.